What's up everybody, Nate here, and the housing market is at one of its lowest points that we have seen in nearly 20 years. Right now, home sales have declined every single month for the past 10 months. The last time we saw that was 1999. Home builder sentiment has also decreased for the last 12 months straight. Meanwhile, interest rates have also gone way up and are now hovering around the 7% mark, causing demand to go through the floor. Inventory really isn't picking up either, and new mortgage refinances are also not really picking up. That is all causing a massive slowdown in the housing market, something that may end up actually flipping in 2023. Now, when I talk about the housing market flipping in 2023, you have to look at the data here. The data is telling us that home affordability is well beyond many Americans' means right now. So millions of Americans simply can't afford what the price of a home is, and that's for pretty much all generations, right? The other thing that you have to look at is mortgage interest rates, and those are most likely going to continue to go up as the Federal Reserve raises its interest rates. What that tells me is that houses are getting expensive. Everything that has to do with a house, from renting to buying one to anything, is costing more in 2022 and probably will cost more in 2023. The interesting thing that we're starting to see right now is that home builders and banks are trying to spur up any amount of interest in the housing market that they can. And that is exactly what worries me going into 2023, because that is exactly what happened in 1999 and the early 2000s. You gotta remember, in the early 2000s, homeownership and the mortgage scene wasn't this huge moneymaker for banks and corporations and investing firms. A house at the end of the day, though, was the American dream. So what they started to push to Americans is that you need to have a home, and everybody in the United States should have a home regardless of income and regardless of assets. This kind of created a spiraling effect, and now you had banks and financial institutions that were getting riskier and riskier with their loans. They were loaning money out to everybody and anybody that wanted one. So you could basically walk into a bank, ask for a $200,000 or $300,000 mortgage, and they would give one to you, no questions asked. You didn't have to have a job, you didn't have to have an income or assets or anything, and you could still get a home. Now, in one way, I think that that can be a good thing. I'm glad that people were able to get a home. I'm glad that there were options for them to actually get into a house and have a place to live. But the problem is now all of these people got a home thinking that they could afford it, when in reality, they could not. That led to a systematic failure in the housing market, and I worry that that might be coming again in 2023. Right now, we have mortgage-backed securities, and we have banks, and we have investors all looking to make money off of the housing market. And the problem is, there is no money to be made in the housing market right now. Whether you're flipping a house, whether you're renting out a house for an investment, building homes, you name it, any corporation or investor looking to make money in the housing market is going to have significantly lower returns. Even if you are an investor in REITs, bottom line here is that all of these things make money off of appreciation, which means that the value of the home is going up over time, but all of that appreciation is starting to slow down. And if that continues to slow even further, then you're going to see even less investment in the market. As the Federal Reserve raises those interest rates higher and higher and higher, that means mortgage interest rates are also going to get higher too. So even fewer people are going to be put out of the housing market. That means fewer people can buy a house, and when you have way fewer buyers and all of this supply on the market, that means prices are going to come down because it's a buyer's market. I don't think we're quite in a buyer's market just yet, but we are getting close, and we could potentially see that in 2023 as prices significantly come down. Now, prices are heavily inflated, and that's what the Federal Reserve is working on with raising its interest rates. It wants prices to come down in the housing market because, let's face it, they are way too high. Nobody right now is buying homes, so prices do need to come down. The problem is, how far are they going to go? If prices do come down, well, that's not really a big problem because they've been so heavily elevated. But if they start going into the negative returns and actually are worth less than what they were, say, at the beginning of 2020, now pretty much everybody that bought a home over the last couple of years is going to be underwater on their mortgage. So that means if they go to sell it, their home value isn't worth as much as the mortgage that they bought. So if they sell their house, they're going to owe money on their mortgage, and that just doesn't make any financial sense, meaning that they're either going to go into foreclosure if they can't afford their house, or if they can and they want to move but they just can't sell their house because they're underwater, well, then they're not going to, and they're going to ride this out, and they're not going to add that supply onto the market. We can see that from every different angle, and trust me, if I can see it, then your big banks and investment firms can also see it. But at the end of the day, these banks and financial institutions and firms, well, they need to make money. They have to figure out some way to make money, and this is where things start to get really tricky in the housing market, and where these banks are going to have to start getting creative. You obviously can't do all of the same things that you did pre-2007 housing market crash, right? You now have to double, triple, and quadruple check that somebody has a job, or they have assets, or they have some way of paying back the mortgage. Many people are also not going into adjustable rate mortgages. There have been a few here and there in 2022 because interest rates have been so high for a 30-year fixed mortgage, but for the most part, they're not as high as they were, say, in 2006. But these banks and financial institutions may figure out smaller ways to get people to borrow more money and to get people into those houses. I've talked before about home builders actually offering to pay a portion of the house's value in order for somebody to actually buy their newly built home. This incentivizes people into getting into that house, so they'll essentially put down maybe $5,000 or $10,000 into your down payment, totally free of charge, just for you buying the house, because they'd rather pay $10,000 than to have a multi-$100,000 plus house sitting on the market with nobody to buy it. That allows some people to get into a home, but it also means that there's going to be a group of people that are getting into homes that they might not be able to afford down the line. That creates a huge problem if we end up seeing big job loss from businesses and a recession around the corner because of the Federal Reserve raising their interest rates, or just other economic problems that we face. What you have to remember about banks and financial institutions is that at the end of the day, they want to make money, and they make more money the more financially uneducated you are. So if they kind of play this message that you're able to get into a house with a low interest rate, like an adjustable rate at first, and that's going to help you finally get the home ownership that you want, well, those all sound like great things, except for you need to make a better decision with your money, or it's going to cost you down the road. They're going to do whatever it takes to get a home, and that is something that I want you to keep in mind going into 2023. Whether you're looking to buy your first home, or whether you're looking to buy your second home, or whatever it may be, you need to figure out what makes the most financial sense to you. Buy a home if you can afford it. If the interest rate makes sense and the actual price of the home makes sense for you, and you can actually make those mortgage payments, then that's great, and you should be able to have the home that you want. The problem is we don't know what's going to happen in 2023. We don't know what our economy is going to look like. We don't know if we're going to see a recession, so you don't want to push yourself and stretch yourself too thin, but that is what the banks want you to do, because they know it's a hard sell right now for you to buy a home or to get an auto loan. So they're going to do whatever they can to kind of convince you into getting that loan that you probably couldn't afford in the first place. I don't know what's going to happen in the future either, and I don't know if we're going to see an outright recession or a housing market crash next year. There is a lot of factors that go into the housing market, and nobody can be 100% sure. With that said, it wasn't overnight that the housing market crashed in 2007. No, the housing market is very slow to build a bubble over time, which means the pop, if that actually happens, is also going to be prolonged. Just like we saw in 2007, it took years for everything to kind of even out in our economy, and the same thing could happen 2023 and beyond. So you could say I'm not really concerned so much about 2023, but I am concerned more about 2024 or 2025, and the longer we have these issues in the housing market, the bigger the problem we're going to face down the road. For instance, only 20% of the market right now is made up of new home buyers. So these are people who have never purchased a home before. Usually that number is around 40%, so almost half of the market is new home buyers. This benefits the market because of, one, uneducation from buyers and the real estate agents. So now you have people buying houses, they don't really know what they're getting into, so they probably buy more, they probably spend more, and that is good for the bank. But two, now you have entire generations, 18 to maybe 25 years old, who are entering the market for the first time, and they're going to buy a house. The later on in life you get, the fewer homes you own. These are just facts. And people are going to be moving around a lot. So with people buying their first house, chances are they're only going to stay in that house 2 to maybe 5 years. Then they're going to go to another one. So you have generations kind of moving out of houses every 5 to 10 years, and that is good for our entire economy. But you have have fewer and fewer new home buyers. So now you have an entire generation of Americans who are not home owners. They're basically missing that stage of their life. And if they're not able to afford a home because of high interest rates and prices right now, then they may never get one. Young adults between 18 and 30 years old, well, those are their biggest money making years. If they can't get a house during that point, then they may be too far behind to afford one later on in their life, which means they're losing those wealth building opportunities, and the entire market is losing a generation of people that could be potential buyers. Meaning in the future, when we finally have all these 40, 50s, and 60-year-olds selling their houses, well, who's going to be able to afford one? Spoiler alert, it's nobody, which means home values could plummet and stay low in the future as all of those houses eventually get put on the market. All of those problems start today. All of these unaffordability problems start today. Now, the question you're probably thinking is, well, what exactly can we do about it? And the reality is, well, we don't control the stock market, right? We don't control mortgage-backed securities. We don't control what banks and the Fed are going to do with their interest rates. You have no say over that. So the only thing that you can control is your own decisions, the jobs that you get, the income you get, and what you invest in. If you want to get a house, that is always going to be an option for you in the United States, and there's always going to be opportunities for you to get that home. But it might be harder in the future, or it might be easier. Again, we just don't know. The fact is, you have to go through the process of preparing if you want to get that house. You have to go through the necessary steps. You can't cheat your way into a new home, because that could potentially burn you badly in the future and cause you to not have much of anything down the road. So you have to make good money management decisions, and that all comes from financial education. The more financially educated you are today, the more opportunities you're going to be able to seize in the future. That includes the stock market or commodities, but of course, the housing market. You want to stay up to date with all of the trends and what is happening, and you want to educate yourself on those trends so that way in the future, if we have a downturn or an explosion, you are in the right financial place to make a move. Don't sit here hoping that the government is going to help you out to get a house. Don't sit here hoping that banks are going to help you or the stock market is going to help you, because they aren't. They want to make money, but you have your own goals, and your goals should not be to feed more money into them. That way, if we do end up seeing a flip in 2023 or beyond, you will be on the benefiting side of it rather than the side that is suffering. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.